that were sent. Are we there now? So quickly, just give me the values for who sent. Yes, color TV. The calculated value, right? Yes. The next one. Alright. So this is for the goods that were sent. The goods that were sent is the color TV. Now I'm talking about the value, okay? So you multiply how many goods were sent times the invoice value that was given. Are we there now? Multiply by the invoice value, then you have the value of goods that was sent. Okay? Now I said we are going to be adding the principal's expenditure, right? And then the agent expenditure. So let's start with the principal. That's on the debit side. So on the debit side, you got the value of goods that were sent. The next thing is your consignment expenditure. And so give me the values. Handling charges. Did we use quality? We added. We added together. And this time the total figure is how much? 5,300. Next one. Is how much? 5. Next one. Next one. Price. Price. That was good. So we are adding the value of goods sent, consignment expenditure, and then the word consignment expenditure. Now the consignment expenditure can be gotten from here. That's why I said you cannot prepare this account if you have not prepared the account for sales. So for your consignment expenditure, you can get it from the account sales, right? So just go and pack all the expenses from here and just bring it here. Are we there now? Yes. So give you all the values. Custom duty total value is how much? 740. 42. Next one. Handling charges. 8,976. The next one is what? Total value. 8,000. The next one is what? Warehousing. 10,000. Value. 12,500. Next one. Other selling expenses. 8,100. I think this is all right. Yeah. Then the last one is the entitlement. But that's why I said everything. You are just moving them. Once you just get through the consignment expenditure, just move from the account sale all the consignment expenditure and then the word entitlement. So the commission is what? 8,395. And then jail to the jail. 198. Yes. Alright. I believe that day, or this Saturday now, we were through with this side now, the debit side, so the credit side. I said, what are the things that are going to the credit? I said 4 things are going to the credit side, right? I I said 4 things are going there. Number 1 is what? Sales. Number 1 is sales, right? And the information on sales is gotten from where? The information on sales is gotten from where? From the agent is the account sale. Are we there now? Your sales is going to number 1. Which account is going there? Insurance, yes, insurance. In the case where the insurance company has agreed to compensate you for your loss. Are we there now? If the insurance company agrees to compensate you for your loss, then you now credit what? Insurance. Are we there now? Yeah. The total that is going there is what? Return. If goods were returned. If goods were what? Return. And then lastly is what? Closing stock. To enjoy. Closing what? Stock. So those are the first things that are going there. Once you get to the credit side, you need to start checking. Do we have this person? You do roll call, right? Is sales present? Yes, then you enter sales. Is insurance present? Yes, you enter what? Insurance. Was any goods returned? No, then you did ask them. Is it not true? And then you now calculate your closing stock value. Alright, goods spent. Let's talk about sales now. The value was next, brother. That one. Alright. 20 naira. 7,000. Next one. Radio. 1,186,000. We are through the stage, right? The next thing is what? Insurance. Now, if you look at the question we are solving, David Alex Insurance Company, and then read from there, agree to what? Agree to what? Indemnify the consignor for what? Up to the point of loss. Up to the point of what? Loss. Up to the point of what? It means for every expense that was incurred before that goods was lost. Are we there now? We are going to calculate the value and then they are going to what? Pay them back. That's what it means. They say up to the point of what? Loss. Now, they say that the goods were lost in transit. Bless me. The goods were lost where? In transit. Before the principal sent those goods, he already incurred all these expenses. Are we there now? It was when the goods was on the way to go and meet the agents and the goods were what? Lost. And the goods were what? Lost. It means every expense that the principal made is part of the cost that was incurred up to the point of what? Up to the point of loss or damage. Are we there now? So to calculate the value of the insurance we are going to be receiving from the insurance company, we will now have to do a calculation of the value of the goods up to the point of what? Loss. Mind you, how many goods were sent? How many color TV were sent? 1,000. How many black and white? 2,000. And how many radio sets? 3,000. So we want to know the cost of 8. Is it not true? The one that was lost was just 8 color TV, right? Yeah. And then 2 black and white. And then 4 radio. Not all. But for us to do the work is. So let's calculate the value of insurance. Let's know how much compensation. We can receive. So starting from the first person, which is color television. So if you are just coming today, even if anybody is taking notes, you want pay attention. But click on this in the last class. Anna, blessing, comfort, we just come today. Jane was today. I don't know. Are you not here last week? I was there. You were here on Friday, when you on Saturday. Now you were here. Alright, let's look at the value of goods that were sent. This is the first cost that was insured. So the value of goods that were sent for color TV we have how much? 1,000. Yeah? Value. Black and white. Radio. This is the value of goods that were sent. Now let's look at the principal's expenditure. So for the handling charges, how much did the principal pay on color TV? 2,000. 2,000, right? Yes. How much did black and white? How much did they pay for handling charges? And how much did he pay on radio? 180. The next expense of the principal is transportation to seaport. All the goods were transported to the seaport. Is it not true? 3,500 and 2,800. That's 2,000. Next expenditure. How much was it for color TV? 5,000. Next one is what? 50,000. I think that's all right. So I said the principal or the consignment already incurred all these costs before the goods were what? Sent. Are you with me now? They incurred all these costs before the goods were what? Sent. So for us to know the total cost of goods that were before they were lost in transit. Need to calculate. So add for me 1,207,000. Next one. 1,320,000. Last one. 948,000. So this is the total cost. Are we there now? Total cost up to the point of what? Loss. Total cost up to the point of what? Loss. But what we want to calculate is just the cost of 8, 2, and what? 4 sets. Okay, for the color TV, the black and white, and then the radio. We just want to know. So the first thing will be to get the cost per one set. Are we there now? The cost per what? One set. So the cost per one set, if you want to get for color TV, what do you do? Divide by 1,000. Cost per one set, right? Under color TV, you divide this amount 1,277 divide by what? 1,000 to give us what? 1,277. For the next person, 1,000 divide by what? 2,000. That's the total black and white, right? And that will give us what? 616 naira. The last person is 948 divided by what? 3,000. To give us what? 316. Now this is the cost per one word set. Are we there now? Are we together? This is the cost per one word set, of the goods that were lost. This is the cost per one set of the goods that were what? Lost. The insurance companies are going to pay us up to the point of what? Loss. So that means for the color TV. For the color TV, we are going to be receiving an insurance of how many goods were lost? 8. So 8 times what? The cost of 1,277. Multiply what do we have? 10,216. 10,216. The next person is black and white. How many goods were lost? How many black and white? Then how much is the cost per one up to the point of 6? Multiply 1,200. And then the last one is the radio, right? How many radio sets were lost? 4. The cost for one is what? 320. Multiply 1,264. Are we together? Now the next, I think there are 4 items, right? We are through with sales, we are through with insurance. The next one is supposed to be what? Return. But was there any return? No. because no goods was returned by the agent to the word principal. And then the last thing we are going to be entering is the word closing stock.
Okay.
So we also need to calculate the value of closing stock, right?
Okay.
Right? Add all the other was expenses of the agent. Apart from which expenses? Apart from advertising,
Commission.
we are not adding advertising because you cannot be saying if the advertising was effective or the advertisement was effective, those goods would have been so. Are you with me now? Yeah. So that when we are calculating closing stock, we don't include was advertising because if the advertisement was effective, those goods would have been what? So the advertisement is only effective for goods that were what? So we're not including what? Selling expenses. You did not say that you have selling expenses. You did not sell it now, so how do you have selling expenses again? So selling expenses also for goods that were what? So it's not part of closing stock calculation. And then you not include what lastly? Commission. Commission is calculated on what? Sales. So if you not sell on holistic calculate commission, it's not possible. So when you are calculating the value of closing stock, you not include advertisement, you not include selling, and then you not include the entitlement. Are we there now? But every other expense should be procured in calculating the value of what? Closing stock. Are we good to go? Okay, the value of closing stock, I think that's with the give me handling charges as fast as possible.
Handling charges 2,000.
And then
1,500.
180. How much? 8,000.
3,500. 2,800.
And you say 3,500. Transport to seaport. 3,500. Sorry, 3,500 and then
2,800.
and what?
2,200.
Next one is what?
Insurance.
Give me the value of
5,600.
5,600.
3,400. and 3,200.
3,200. Oh, everybody seems the value as correct, but yes. For your free is how much?
15,900.
15,900.
12,300. 10,800.
Big guy as well. But that's not still all because we still have
Consignment expenditure.
So we have custom duties. Separate from it. Okay. For the color TV, we have what? 13,848. So we are adding 13,848, right? For your black and white, what's the expense? 17,676. And then the radio.
17,218.
Custom duties we are including handling charges. Both sold and unsold goods. You have to pay handling charges and custom duties. So give me the separate 1984. 1984.
3996.
Good, now can you see the board? Can you see the board? That's right.
2996.
Carry it to warehouse in the next one. 8. 3 8. 2 8. 2 7. Where else? Where are the value?
2 5
2 5.
3 5
3 5 and what?
4,000
4.
1,000
For color T, what's our cost? For black and white, what's our total?
1,347,900.
So for the last one now, add from the 930. From the 930, 974,000. This is our total. This is the total value for the unsold goods, right? But what we need is the value for just how many goods are unsold. So let's divide. Here we are divided by 992. Are you with me now? When we remove the goods that were lost number, 992. Here we divide by 1998. Here we divide by 1998. So your closing stock value, the first person you are adding what? So for the first per one, what do you have? As a whole number. Okay. Next one.
674.
674. And then the last one is what?
325. 325.
That one is what? Patient. You are dividing now. I don't have space. I don't have space. So I'm dividing. 325. That is the cost per one set of unsold goods. Are we there now? The cost for one set of unsold goods, one set of anything that is unsold, one unsold television, one unsold black and white, one unsold radio. Number of unsold goods. How do you calculate the number of unsold goods? How many goods percent for the color television?
1,000.
1,000. Right? How many goods were sent here? 2,000. How many goods were sent here? 3,000. We want to know the number now, not the value again, right? We are through with the value. We are getting cost per one unsold goods. Now we need to know the value of the number of unsold goods. So we are calculating for quantity. Are we there now?
Yes.
This was the number of goods sent. Then damage in transit. How many television were damaged in transit? 8. How many here? 2. And how many? 4. What do we have?
992.
992.
1998.
1998. And
2996.
But is this up? Now how many goods were sold? 970. 970. How many were sold for? 1981. And then the last one? 2970. Subtract, we have what?
22.
17. 26. So these are the number of unsold goods we have. Are we there now? Good. So when we want to calculate for your closing stock now, unsold goods multiplied by the cost per one. Are we there now? Unsold goods number, the number multiplied by the what? The cost per one. The number multiplied by the cost per one. So that we can have the value of what? Unsold goods. So to calculate the number of unsold goods, you now check the goods that were sent, less the goods that were damaged, and then less the goods that were what? Sold. Any other thing outside that damage was it's in the shop, right? It was unsold. So for your closing stock, for the color television, you now be having how many goods now? 22 multiplied by what?
1,298. 28,556.
Now only the calculation. 28,000 what? what?
556.
28,556 for your black and white television. How many books you on sale? Number 70 multiplied by the cost of 1. 674 to give us what? 11,458. And then the last one is the what? Radio. How many you have sold? 26. The cost for one is what? 325. 8,450. So let's balance the account first for the first day. Then we'll open the account back again. Then we treat the other one that was sold the next day. We did taxation, right? When we said that an accounting year ended on 30th September, if you have something on 1st of October, is it still part of the accounting year?
No.
So let's balance debit side. Who is adding for us? So your debit side value, credit side value, so we can balance our 961.
Yes.
Good. Total credit side. 4,481,000. Which side is higher? Which side is lesser? Credit is higher, right? That means we have what? Profit. So give me your balance carry down. Your balance carry down is what now? Your profit or loss. To profit or loss account. 700 and what? 707,000. 4,481,014. Total is in the same line, I think. So the same thing should be there. 4,481,014. So you close this Z side is like you are closing your account. Are we there now? So that nobody come and write another figure here. So this is your profit or loss account for the year. Is it not true? Eh? Is it not true? Now, this is your closing stock. Is your balance carried down? So you now bring with your stock BF, color TV. Closing stock is in the credit side. If I it is not true. Remember that you have the balance carried down. Or should I add the balance carried down here? Closing stock carried down. And now our closing stock brought down. Eh? That's the balance brought down. So your closing stock balance carried down on the credit side. Then your brought down CBF on the debit side. On 33rd December 2013, another account sale was what? Received by the consignor. Are you all with me? Showing that the remaining stock, the remaining what? Stock. The remaining what? Stock. That's your closing stock, I think. So your remaining stock, the remaining stock were what? The remaining stocks have been sold for a total sum of how much? Now, in this case, did they tell you how much they sold color TV? Did they tell you how much they sold black and white? They just say a total sum of what? 64,800. So your sales is what? We're not going to differentiate also. Are we there now? Don't go and start saying you want to use percentage. Did they say you should use any percentage? Alright. So, unless if they say you should use percentage, right? Good. Was sold for a total sum of 64,860 after incurring what? Advertisement and selling expenses of what? 4,800. Then they combined together. Are we there? Yeah. They did not separate advertisement from the selling expenses. So we have a total of what? 4,000. Very good. Now, if these goods were sold, that automatically means after the advertisement, we calculate what?
Entitlement.
We calculate what? Entitlement. Very good. So the advertisement and selling cost. I don't ask this, so So you do entitlement for me. 4,000 what?
3% and 1%.
4,280. So you do entitlement for me, commission.